Market Outlook, Calendar Week 07. The past trading week was marked by an abrupt and broad-based downward move in the digital asset market. The trigger was not a single event, but rather a combination of several pressure factors: persistently restrictive financing conditions, elevated real yields in the United States, weak risk appetite, and a fragile market structure with limited liquidity depth outside the major benchmark assets. The price decline expanded rapidly and evolved into a market-wide deleveraging process, putting both spot and derivatives positions under pressure. Altcoins with high beta, low market capitalization, and upcoming supply events were particularly affected. The market response was mechanical rather than emotional. Rising funding costs, declining liquidity, and forced liquidations defined the overall picture. Results from quantum data analytics in research mode. During this phase, quantum data analytics remained consistently in research mode. Despite the high volatility and pronounced price movements, no active research signals were developed. The reason lies in the data itself. The market move was not the result of a clearly identifiable statistical pattern or a stable regime shift, but rather of uncoordinated risk reduction across multiple market segments. In such phases, classical momentum, Bonanza's mean reversion or volatility models do not provide robust signal quality. Priority was therefore placed on observation, validation, and protection against structural model risk. Transition into the new week, Bitcoin Dominance and Fear and Greed Index. At the start of the new week, Bitcoin dominance is significantly elevated, while the Crypto Fear and Greed Index remains in the extreme fear zone. This combination is typical of phases following severe market dislocations. Capital concentrates in the most liquid asset, while risk budgets are withdrawn from the broader altcoin segment. The sentiment indicator does not necessarily reflect a short-term directional bias, but rather a state of maximum risk aversion following forced position reductions. Outlook for the upcoming week's events. From a macroeconomic perspective, the new week is shaped by key data releases from the United States and China. US labor market data and inflation releases are directly relevant for the expected monetary policy path and, consequently, for the development of real yields. At the same time, Chinese inflation and credit data provide insights into global liquidity dynamics. Geopolitically, the environment remains tense, particularly with regard to trade conflicts, energy prices, and security-related risks. For digital assets, this backdrop implies continued high sensitivity to macroeconomic surprises, especially during data release windows. In addition, token-specific supply events, such as unlocks, may act as volatility amplifiers in an environment of thin order books. Assessment for trading and potential positioning. Under these conditions, the market remains in an event-driven, risk-averse regime. Market breadth is limited, correlations within the crypto market are elevated, and Bitcoin continues to function as the primary structural anchor. Quantum data analytics continues to assess this environment as unsuitable for the development of active research signals. As long as there is no stabilization in liquidity, no normalization of financing costs, and no clear regime confirmation, the focus remains on risk monitoring, structural observation, and data collection. Any potential positioning is therefore defensive in nature, prioritizing capital preservation and structural robustness over short-term opportunities. Disclaimer: this publication is provided solely for informational and research purposes and does not constitute investment advice or a recommendation to buy or sell any financial instruments or digital assets. All content is based on publicly available data and model-based analysis. Despite careful preparation, no guarantee is given as to completeness, accuracy, or timeliness. Investments in digital assets involve substantial risk and may result in the complete loss of invested capital. Past performance is not a reliable indicator of future results. Quantum data analytics. Analytical, strategic, innovative.